AMC stock rallied over 20% on Friday due to this special dividend that all AMC holders will be rewarded with later in the month of August. And now, why did the stock rally 20%? What do we have in store, and how could this possibly spark a chain of events which could lead to a Moass-like event? That is what we're going to talk about here in this video, so let's get straight into it. AMC, long story short, let's just give a brief rundown of what is going on if some people don't know. Essentially, what AMC is doing is rewarding shareholders in the form of doing an artificial share count, because AMC will issue 516,800,000 and some odd thousand of these ape shares. Now, they will only go to legal shareholders. So if you think about it in that sense, what does that do? That is an artificial share count. That would mean that some people possibly would not get an ape share, and that would expose the synthetic shares, the naked shorting that we know has been going on with AMC over the past year and a half. That is a bad thing for shorts in AMC, for market makers, for brokers that have been profiting from all of the retail attention on AMC stock, because after all, the last thing these guys want is to not profit off of retail investors that consistently and consecutively buy the dip on a weekly basis. They want to make money on that. If there's not shares available and you're betting against that stock, what have they been doing? Well, they've been letting us buy shares, but not all of them have been legal shares. Okay, so that's the backstory. That's what's going on. AMC earnings were very unspectacular. They just had pretty much normal earnings, what we expected. It wasn't a big blowout. It wasn't a big miss. It was along the lines of expectation. So what is that doing, though? Let's circle back to the whole artificial share count. Well, hedge funds don't want to expose their fraudulent activities, so if they go out and buy AMC stock right now, well, you wouldn't be exposed on your synthetic shares, on your naked shorts, right? You wouldn't be exposed, and that's why AMC stock rallied on Friday. That's the bottom line. That's the simple truth. Hedge funds don't want to be exposed. Now, how could this turn into a bigger event? Well, let me tell you, on Friday you did not see FOMO buying. You did not see anything spectacular in terms of a gamma squeeze. In my personal opinion, what caused the 20% move on Friday was actually retail investors buying more of AMC, but also a little bit less of that fraudulent activity, because after all, you're not going to keep naked shorting the stock or letting synthetic shares out there if you knew this artificial share count was coming and you would be exposed. I also do think there was, to some degree, hedge fund buying activity. Now, there was buying activity, a lot of it from hedge funds over the past couple of days with options, and specifically on Friday as well, which we will talk about that, but I don't think there was a significant amount of shorts actually covered. And especially during the last couple of minutes of after hours trading, AMC's seen a pretty decent move to the upside, about 1% in the last 2 minutes of after hours trading. So I do think that is indicative of some degree of shorts covering, but this rally was not a shorts covering kind of rally. You didn't see one halt throughout the day. It was more so slow and steady. Hedge funds don't want to make the stock go crazy, but they did have to buy some shares to essentially get out of those synthetic positions. But why I think there wasn't really a significant degree of a gamma squeeze, of FOMO, of, shorts covering, is because the volume was only 126 million shares. Even back here in March, you seen 227 million shares that were actually traded the day AMC popped about 45%. And we know the shorts really didn't cover during that time period. What they actually did was short the stock the day after that and basically pummel it to the ground after it was halted about 5 minutes into trading, and then you just seen a bleed out after that. Now, why this looks different, I mentioned that in the beginning of this video. Because of where the moving averages are and the strength that we've seen on Friday. So for an example here, we've seen a very clean breakout over the last couple of weeks, right? We even came up above the 100-day moving average, peaked out at about $18.36 per share, fell under the 100-day moving average, fell under $15 per share, held support at the 50-day moving average, which we did as well, back in late June. And then what happened? We gapped above the 100-day moving average, went higher than 1836, our previous level of resistance where we peaked out last time, and then we got this 20% day, and we actually went above the 200-day moving average. So if you think about 70, 80, 90%, depending on what day it is, right? Different days are going to be different percentages. That's the percentages of trading that is done by algorithms. And what do algorithms do the most? There's a lot of different factors they take into the equation, but a lot of algorithms trade based off of fundamentals, and especially around the 50, 100, and 200-day moving averages. Those are very, very key levels, and that's why I always talk about them almost in every single video, and I like to keep them up with any stock that I am looking at because they're so important. Now, when you get above the 200-day moving average, as a rule of thumb, that is a bullish trend. That is a change of tone around that equity, around that security, no matter if it's the S&P, no matter if it's Apple, no matter if it's any other stock. 200-day moving average, very important for trend. And the fact that we actually went way above that, closing over $1.45 higher than the 200-day moving average with a lot of strength, I think we could be poised to go for our next major levels of resistance over the next couple of trading days, which would be around $25, and then around $30, and then around $35 per share. Now, I do think once you get some of that FOMO that steps in, some of that gamma activity, right? A lot of people buying options, and mix that in with more shorts covering, you could start this domino effect. Because after all, yes, stock market has come back a lot, but the sectors that have really come back a lot, like technology, are not very heavily weighted in hedge funds portfolios. Right now is actually the lowest point in time of hedge fund exposure to tech. So really what is going on right now is you've seen a portfolio rebalancing due to how well tech is outperformed, but hedge funds have not really benefited from that in a huge way. So I do think liquidity levels are still very, very stretched in hedge funds portfolios. So I do think you can start this domino effect, and I think once you can really break out above 35, once you get above 40, 45, 50, that's when you could see a lot of pressure on hedge funds, and that's when you could start to see the medium size to large size hedge funds that start to cover on some of those bigger positions, short positions, maybe in the millions of shares. So I think you have that, and on a fundamental basis, this does change the game. AMC is going to be using this somewhat as a currency. From what I can tell, they can issue about 4.5 billion of these ape shares, and that fundamentally helps the business because it's not dilution for AMC stock, but it will help the company itself. And you also did just get really good earnings, so there's not really a short thesis left on AMC. It's been dissolving every month for the past year and a half, and you get this on top of it. So I do think once you can add that FOMO, that gamma, and hedge funds starting to get squeezed out of their positions, that's when AMC could make a really big run to the upside. And I think that could possibly be over the next couple of weeks. If not, we could see a pretty big move this upcoming week. And now the biggest thing that could derail a rally with AMC stock, because as we do know, AMC can perform much better than the overall markets, and maybe this time would be different. But if we have a really bad day in the markets, AMC tends to be affected by that. And what the markets want to pay attention to is inflation. Now, we do get the CPI and the core inflation coming on Wednesday at 8:30 in the morning. That's going to be the first thing that could send some shockwaves through the markets. The markets right now are expecting inflation to come down and only be at about 8.7% year over year. Last reading was 9.1%. So if you get that higher than expected CPI reading, well, the markets are probably going to start freaking out. And the good thing is Monday and Tuesday, you really don't have anything as far as economic activity that could derail a rally. It's really on Wednesday, and then on Thursday you do have PPI month over month for July. That will be important. And then on Friday, you do have the Michigan Consumer Sentiment Preliminary Survey. So really, Monday, Tuesday, those could be big rally days. Wednesday as well, we'll have to see what happens with CPI, but that could also be somewhat of a 50-50 day for the broad markets. And then after that, we should be free and clear throughout the rest of the week. So granted, we don't have a lot of economic activity. It is important, and where AMC stock is sitting, I think it could be very, very bullish. Now let's go ahead and take a look at the Ortex data. You're looking at a dollar amount of short interest on AMC sitting at $1.77 billion. Estimated short interest of free float at 18.4%, free flow out on loan 24.71%, shares out on loan 127.33 million, days to cover 2.99, cost to borrow at 9.26, and 100% share utilization. The cost to borrow max sitting at 12.51%, cost to borrow minimum at 4.33%, and cost to borrow average at 8.72%. Now as far as the option activity, look at some of these options that are coming through. The last minute of regular trading on Friday, you've seen a January 20th, 2023 145 call that went through. January of 2023 is right around the corner. That's only about 4.5 months left on these contracts. So theta will really start to, tear these contracts up if you don't see a big move. And this hedge fund is betting that AMC stock is going to go to $145 by January 2023. That is betting on a Moass. That is betting on a short squeeze. Even for this next expiration, well, not this week, but next week for August 19th, you got $30 calls coming through, $29 calls coming through, $22.50 calls, $23 calls, $24 calls. Some those ones expiring by this Friday. 24, 22.50, 23 dollar calls expiring by this Friday. I think that's very directionally bullish if I were to say so myself. Another order for August 12th, the $23 calls as well. So a lot of this option activity is bullish, and you have seen a lot more orders and for a higher dollar amount over the past week. You have seen 248 orders totaling $20.64 million, positive order value of 54%. So if I were to say so myself, I think this is pretty damn bullish, and I think it's hard to be bearish on what we're seeing right now with AMC stock. Now, I wouldn't bet the farm on AMC going through the Moass right now. I have predicted publicly for a very long time, end of summer, beginning of fall, that's really the time where I think liquidity will be at its lowest. AMC as a business will be fundamentally better, which we've proven that already, especially with this last earnings call. But I also think in that time frame, you're going to get some new announcements from AMC that could change the game and cause a short squeeze, which is exactly what we just got. So like I said, I wouldn't bet the whole portfolio here, but depending on the size of your portfolio, me personally, put a couple $100 on the trade. Not a bad idea in my personal opinion. A couple $100 could it turn into tens of thousands of dollars if you do see a Moass like event. So that's pretty much going to be all for this video. That's really what you guys need to know. A little bit of my thoughts mixed with the data. I'm very bullish on what I'm seeing. Usually AMC drops like a rock after earnings. The last 1, 2, 3, 4 earnings, AMC has dropped like a rock after earnings. Not this time. Quite the opposite. 20% rally. Very, very encouraging what we're seeing. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already, and get yourself those free stocks. Links down below in the description for Webull, Moomoo, and Public. And if you want to come trade with me live in real time, link down below in the description as well. We did have earnings trades on AMC. We strangled this thing both ways. We bought puts, we bought calls. We sold out the puts in the morning, made a little gain, and the calls are up about 200%. As of Friday. So pretty exciting to see what that does heading throughout the rest of the week. That's it. You guys enjoy the rest of your day and your weekend. I will see you in the next one.